Thank you for staying with SABC News. Asian markets traded mixed in today's session. However, investors continue to weigh their concerns around the escalating tensions between Russia and Ukraine, Donald Trump's second presidency, and the U.S. monetary policy. Investors are said to be watching closely at Trump's cabinet picks with concerns that he may appoint China hawks, fanning worries of another trade war between the world's economic superpowers. The Nikkei share average closed down 0.16% to 38,352. The Hang Seng Index rose by 0.21% to 19,705, while the Shanghai Composite Index ended the session up at 0.66% to 3,368. U.S. markets ended yesterday's session mixed. Tech counters continued on a positive note, with Nvidia shares helping to drive the Nasdaq's performance on expectations from the market of a good earnings report later today. The Dow Jones Industrial Average declined by 0.28% to 43,268. The S&P 500 ended the session up on 0.4% to 5,916, while the Nasdaq Composite Index rose by 1.04% to 18,987. Back home, the JSE is higher, trading higher today. The all-share index is up 0.86% to 85,250. The rand is currently trading at 18 rands 11 to the US dollar, 22 rands 95 to the pound, and 19 rands 11 to the euro. Gold is currently trading at $2,625, while platinum is at $970 per ounce, and the price of Brent crude oil is currently at $73.69 a barrel. Our market analyst for today is Chantal, Marx, who's the head of investment research and content at FNB Wealth Investments. Chantal, thank you so much for your time and welcome. Today, big news has been the CPI, the print coming out at lower than forecast, and I'm sure even yourselves at FNB had a slightly higher forecast. Can we then expect the Reserve Bank to go ahead with an anticipated further interest rate? Some are saying we could see as much as, well, we should see as much as a 50 basis points cut tomorrow, but is that even possible at this stage?
So it was definitely lower than what we expected. We expected about 3%. It came in at 2.8% year on year, and really a function of base effects. So a big drop in the petrol price over the last year, as well as a moderation in food price increases. We do think this is the bottom, though. So we would expect inflation to start ticking up again from next month, but to remain below 4%, and importantly below the SABC 4.5% midpoint of their target range. So we do foresee that interest rate cut coming through this month. Whether or not it will be 25 or 50, we are still in the camp that it could be 25% rather than 25 basis points rather than 50 basis points. And that's just simply a function of some of the uncertainties that we have out there regarding geopolitics, the political situation in the US, and the Fed likely to also temper their interest rate cuts over the next year.
Yeah, speaking of geopolitics, the Ukraine has launched a long-range missile into Russian territory. And have we seen investors rushing into so-called safe havens assets? And how much of a bearing are these developments having on the stocks right now?
So we're not seeing a massive rush towards gold, for example, but I think that could also just be a function of a stronger dollar, where we have actually seen some movement. So the dollar has been very strong, and that is a function of safe haven demand, and also the anticipation that the Fed could cut rates by less than expected because of some of the nuances around Trump's policies that he may implement as it relates to tariffs. So for now, I think it's focused on the US market and the US dollar in particular, rather than gold. From an equities market perspective, we have seen a shift again from kind of the value side of the market to the growth side of the market, and the tech stocks doing quite well.
We've also learned that workers have applied for up to 35 billion through the two-pot system, which kicked in back in September. Do you expect that some of that will flow into the retail sector, especially given that Black Friday, that is upon us, and also the festive season is slowly approaching?
Yes, so many economists in their models assume that about half of that money will go towards repaying debt. So that will clear up or allow more credit extension from banks. And that should free up capacity for further spending. And then half of it will probably go towards spending generally. I do think that because we've already seen a lot of withdrawals up until this point, some of that money may have already been spent.
Asset manager 91, they released their half-year results for the period ended September, reporting assets under management of about 1%, but it also announced that it's doing a tie-up with Sanlam Limited. Can you please explain just a little bit what that's about and how investors, as well as both parties, would benefit?
Yes, so Sanlam and 91 have basically agreed on a frame. They've put together a framework agreement in which they will work together to manage Sanlam's portfolios. Yeah. 91 has particular asset management expertise. Sanlam, as you know, is an insurer, so that business isn't as big as 91's business. So 91 is going to work with Sanlam on that. In exchange for that, 91 will be buying Sanlam investment managers, and Sanlam will receive a stake in 91. So both will benefit from scale, so it being bigger, and then also Sanlam will benefit from having the stake in that combined group.
Yeah. Now, I know that tomorrow, obviously, all our attention is tied to the MPC to see what the Reserve Bank, which way it will go. Chantal, thank you so much for your time. Market analyst today was Chantal Marx, who's the head of investment research as well as content at FNB Wealth and Investments.